John has a financial advisor that handles his investments for him. At their first meeting, John answered all his advisor's know your client questions and made sure the investments he agreed to purchase were suitable for him. Over the years, John has built up a trusting relationship with his advisor. One day out of the blue, John receives a phone call from his advisor to tell him about a big new investment opportunity. He advises John to get in on a can't-miss offshore investment that will deliver big returns for low risk. John trusts his advisor and doesn't think twice, writing him out a check in his advisor's name the very next day. John gets regular statements from his advisor, but very seldom does he open them and closely look at them. He has regular contact with his advisor, so he doesn't see the need to closely monitor his statements and accounts. If John had opened his statements, he may have noticed that his new offshore investments were not listed. In fact, there was no documentation on his new investments at all, just conversations with his advisor saying they were delivering great returns, which he was reinvesting for John to help achieve greater returns in the future. John would find out years later that there was no offshore investment. His advisor had run into financial difficulties and had pushed a phony investment opportunity onto his client to get some quick money. Not only was John's money not invested, it was spent by his financial advisor. By the time John found out, the money was gone. What were some of the warning signs that John could have spotted to avoid getting defrauded? Promised high returns for low risk, new special opportunity, no statements acknowledging investments, checks made out to his advisor, not opening his statements. For more information on investment fraud and other investment topics, visit our website at nssc.novascotia.ca and follow us on Twitter at NSS Commission.